Okay, I really wanted to go over the use of the VIX versus the ES to give you an idea of how easily they are anti-correlated, meaning they do things in the opposite direction. So here's the EF daily signal. You can see we talked about the dojis and the changes. That doji's pretty much stopped the up movement right there. This stopped the up movement over here, and then it dropped off. Now you've got two up here that stopped the up movement. We had a couple of big down days and another bounce. This is kind of a Thanksgiving Day bounce over here. But let me show you the other, the VIX. Here is the VIX, and you can see it's just the opposite. When we had the low before, now we have the high in the VIX. And then as the price goes up, we have the low here. And I'm going to separate these and put the two charts together side by side so you can see the correlation. And this is that extra dipsy doodle we had in the little Thanksgiving rally we had. So now here's the VIX. Here's the VIX on the left, the peak. And if you look at the vertical line over on the ES, you see that is the bottom. Now if we move down to this bottom where the VIX starts to do a dipsy doodle here and starts to go back up, this is where we had the dipsy doodle on the ES. Finally, we get a little dip here from the VIX went way up after those 2 days of it going down, and the price went down, and then as the VIX dropped off again, the price went up. Well, the question is, how do you use a VIX, which you could put as $VIX down below, by the custom quote page or on the custom quote page, and it would pop up just like this. Now, I'm going to try to change the times panel and see if I can get this to show you an even closer area. I'll just use a 5-minute. I'll let this stop for a minute. All right, now I have the VIX on the left in a 5-minute chart and the E-mini in a 5-minute chart on the right. And you can see, what do we get? We get a divergence here, a little divergence here. It says the VIX is going to go down. When the VIX goes down, what do we say? That the price was going to go up. Now the 5 minutes are not quite as accurate as before, because when the VIX stops going down, the price is already going down. So you've got to look at these very carefully to understand, but it does give you a correlation. And the ergodic gives you a very good correlation with the signals of divergence. Now you would have only picked up from 1107 to 1110 3 points on that little move if you took this move and got out when you got the Pesavento here. Now one thing I have to do is change the Pesavento patterns, and so what I need to do, let me stop a second. I had to go off screen to do this, but you've got the Pesavento patterns, and I haven't got it set up with the arrows and everything else, but this is just a standard way to do it. So you would just quickly go to Chart Objects, you would go to the second Pesavento pattern, and you would change colors, for example here, and here, and you would put arrows on over here, your choice, okay, up, and you've got to reverse these, down, and then this is red, and this is green. And let's see if I did them right, okay. I'll say I reversed them, all right. You've just got to remember how to do that, but you've got the same signals on the VIX as you do have on the E-mini. So you can move this back as far as you want, and you'll get the same correlation, okay. Here was the absolute bottom over here, and here was the absolute top on that one. If we go back here, we've got an absolute top there, a slingshot, and maybe I got lost in the shuffle here. But anyway, I think you get the idea. So I hope this helps give you another idea on the VIX versus the E-mini. This is Bill McCready for Futures Trading Secrets. Hope this helps.